in a system breakdown, and it's no longer a question of if, it's when. When the system breaks down, do you really believe a farmer is going to accept Bitcoin for eggs? If Bitcoin's even around.
Welcome to another episode of the Kinvestor Report, where I chat with industry experts to discuss the market, commodities, stocks, and the economy. As always, I'm Arlen Hanson, your host. That does not change, but we do bring back guests every week. As always, this interview is not investment advice. I'm not a professional advisor or a geologist. However, I've been kicking rocks for 25 years, visiting mine sites around the world, and certainly learned what doesn't work in the market. Any financial interest Ken or myself has in any companies mentioned in today's podcast will be disclosed. Be sure to do your own due diligence. Don't be an idiot and buy stocks because some fools talk about it on a podcast. Anyways, I'm super stoked to welcome back the great big bad Bill Holter right back to the table. Widely recognized as one of the most outspoken, respected commentators in the precious metal sector. He's earned a loyal following for his unapologetic views on gold, silver, and what he believes is the inevitable reset of the global monetary system. Kind of agree with him. He has long argued that when confidence in fiat currencies begin to crack, the revaluation of real assets like gold and silver could happen far faster and far more violently than most investors expect. If you want to understand what may lie ahead for gold, silver, and the broader financial system, this is a conversation I don't think you want to miss. Bill, thanks for joining us today. How you doing, buddy?
Thanks for having me back.
Yeah, right on. So you said we've crossed the fiscal event, like the fiscal event horizon years ago. What tells you we're in the final stages of the process of just like this absolute collapse that we're talking about, that we believe in?
Yeah, all you have to do is look at the math. Um, the US is already paying 1.5 trillion in interest alone.
Yeah.
I saw a forecast where by 2038, the Treasury will be paying more in interest than everything else together, including the defense budget. That's impossible. Um, and really, what tells me it's here and now is that we have two we've had two Fed rate easing cycles where bonds went down in price and yields went up. They cut back in what 2020 late 2023, I think it was, and they cut by 50 basis points and bonds went up by 50 basis points. They did it again, what was it, 8, 9 months ago. And again, bonds went the opposite direction. Now they're bringing in Kevin Warsh, supposedly a hawk. The man's not a hawk, the man's a dove. Trump would never have picked him if he was going to keep tight money. What's going to be telling is the first time they cut rates, let's watch the bond market and see what happens. I mean, you have yields now in Britain back to 1998 levels. You have yields in the United States back to 2007 levels. You have yields in Japan back to levels that I don't even know how far back, 30, 40 years.
A long time.
I mean, their 30-year bond at one point was 0.39%. It's now 4.1%. And understand that the vast majority of the carry trade was done through Japan, through borrowing in Japan, borrowing at the basically 0% interest rates, and at a time when the yen was stronger. Now that's going to unwind, and as it unwinds, they get killed because the yen's getting crushed.
Yeah. So like how does the cycle compare to like prior monetary resets, like in 1971 or whatever? What do you think?
Well, 1971, uh, the biggest difference between 1971 and now is that the Treasury had a good balance sheet. I think there were 30, maybe 35% debt to GDP. Now we're 130% of debt to GDP. And that worked in 1971 because of the petrodollar, because
Yeah.
all uh, Arab nations were selling their oil in dollars, and they were taking those dollars and buying treasuries. So basically, they funded our deficits. And today, I mean, even Saudi Arabia, the biggest one, they're no longer, they now accept other currencies for payment other than just dollars.
Hmm. Hmm. And like, so if the governments are for, well, we know they're going to be divorced between like default and inflation at some point, right? Like, you must believe that inflation is the like inevitable outcome on this. Like
I think,
they'll keep pushing for inflation as long as they possibly can.
well, yeah, but I've maintained for years, the very end, we're going to see inflation of the things we need and deflation of the things we've already bought, the things we already have, your
Yeah.
assets, your paper assets,
Yeah, 100%. So what are the things that you think will rise in this reset? Gold, silver, what other kind of hard assets?
commodities.
Yeah.
Although you've got to be careful with that because, uh, there'll be some things that will be used less because the real economy's slowed down so much. But your basic staples, that's what's going to go up in price and in real terms in price. And what that tells you is that you want ownership of production of basic necessities. I mean, it's
Yeah.
like caveman investing.
Yeah. Yeah. So some people would might confuse like Bitcoin as an asset that could go up in a time like this. Can we defunct that for them?
Well, first I'd ask, what is Bitcoin? I mean, it's code.
Yeah.
It's 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 nothing you can put your hands on. I think I personally believe it was a psyop, and I think they're going to pull the rug, and that capital is just going to go poof. But in a system breakdown, and it's no longer a question of if, it's when. When the system breaks down, do you really believe a farmer is going to accept Bitcoin for eggs? If Bitcoin's even around.
No, no. And so, like, what do you think? Some like we talk about this cracking, we talk about this happening. What are some of the like again? You're saying that some of the signals are already there. What are some of the
They're there.
investors? Yeah, they're already there. So what are they? What are the investors missing that like they don't like? Do you think right now about this all?
Uh,
Like, how can you not see this?
it's the delusion of crowds. I mean, it's happened. It's go back to the tulip bulb craze. That was the first big one. And then the John Law, that era, then 1929, 1987, 2000. Um, the Buffett indicator now compared to 1987, 2000, uh, 2007, 2008, the Buffett indicator is way higher as far as stocks being overvalued. And they're sitting on 400 billion in cash. And I've had people say, well, he's not a stupid man. He wouldn't own cash because he knows it's going to go poof. Well, first off, there's no way any entity could buy $400 billion worth of gold because it doesn't exist to buy. You would break that market. Secondly, Warren Buffett already went through this once back in the early 2000s. He bought 130 million ounces of silver. I'm sure he got a knock on the door and liquidated it all in fairly short term fashion. He didn't hold it very really that long. Um, but what they're doing is they're not sitting in a money market. They're buying treasuries directly through the treasuries, and they're buying 30, 60, 90-day treasuries. So, that is liquid. Will they take a final haircut in the end? Yeah, I'm pretty sure they will. With a currency collapse, they're already taking a haircut. Anybody who's been sitting in cash for 2 years has taken a 50% haircut. Using the proper
True.
yardstick. The proper yardstick is gold. 2 years ago, gold was $2,500. Now, it traded up to what, 5,400. It's
Yeah.
4,500 now. But from
Yeah.
2,500 to 5,000, that's a 50% drop in your purchasing power
Yeah.
with dollars.
And I don't even think that like this has even started yet. Like the general masses have no fear. Like for the most
They,
part, right? Like for the most part, most people
right.
have no idea, have no fear. Do not look at this as a problem. Wait till it becomes
Well,
a problem.
yeah, there's very little fear. You've got people who have really dug and understand what's going on and what are they doing? They're preparing. And they've been buying gold and silver. And you probably have uh maybe a little while ago it was only 10 or 15%, but I think there's 20 to 30, maybe even a little higher percent people know something's wrong, but they don't have a clue what it is.
Mm-hmm.
And if you don't know what the problem is, how do you prepare for it?
Mm-hmm. And they're certainly not being like fed the truth from the mainstream media, which they
No,
generally
not at all.
speak, right? Like ever,
Not at
ever.
all. I mean, the media is like Jim Cramer, yay, rah, rah.
Like the Kramer indicator, right? Like always just do opposite what he does. So when fiat currencies truly break, because you and I both know that they will at some point, what role does silver have to play in this as well? Like, do you think silver has a big role to play, or
Well, for a time, yes, you're going to barter with silver. You're going to
Mhm,
transact in a Mad Max world, and I'm describing a Mad Max world as the financial system is not functioning. And if the financial system is not functioning, no credit is functioning, the real economy stops. So for a time, 2 weeks, 2 months, God forbid 6 months, a year or longer, if credit is not functioning, you dial 911 and nobody answers.
mhm.
Nothing works. The stores won't be open. Gas stations won't be open. Um, you dial 911, cops aren't coming. Fire departments.
Your bank won't be open.
Yeah,
Like-
yeah. There will be no functioning as it is today. And so you got to transact in something. And the most basic of basic is silver. I mean, there's two monies. There's gold and there's silver. Everything else is currency. Everything else is credit. Now, you can't really barter with gold because if you barter with gold, you're going to end up giving the seller credit because he's going to owe you something.
Mhm.
But if you barter in silver, you want junk silver, you want dimes. 14 dimes equals 1 ounce. That gives you 14 transactions versus one with an eagle or a bar or sovereign, other sovereign coin or generic round.
Hey, specifically about that, do you know what year those coins need to be before to have that amount of
Yeah,
silver in them?
yeah, 1964 or earlier,
1964 dimes
or quarters
or quarters.
or half dollars. But dimes are best because what's better, two $half or 14 dimes?
Yeah,
Well,
because
I'm sorry, 10 dimes.
there'll be no change given back in the situation is what you're saying.
Right.
Right, yeah. That's funny. I was just looking at a coin that Brian London gave me, I'm gonna say 20 years ago. It was 1897 silver dollar. So I looked it up online and yeah, they sell for like $100 plus now in circulation in decent condition, right? And it's because it was a super high silver content back then. But I've been looking at some of my old silver collection, the coin collection, and finding out what years have got the higher silver content and when they stopped doing it for Canadian coins. It's just, I don't know, a little off topic, but a little interesting. Um, I like that. I like your little micro transaction idea there for that though. That makes sense to me, right? Because if you're walking around with, 1 ounce silver or gold coins trying to do barter transactions,
You
uh,
can't.
yeah, they're gonna be worth $20,000 like a coin.
Right.
Right.
So, like I
Yeah,
said, you're giving the seller credit
you're giving this out.
because he owes you something back.
Yeah. So you were talking about earlier how like 20 to 30% have a bad feeling that something's not right,
Right.
but don't really understand why. Do you think all the central bank buyer are actually the people that at it, excuse my language, but like they're the ones that are like, we see what's actually going on here and we're loading up on the buying of the gold?
Of course, they know what's going on.
Yeah. It was a
I mean,
loaded question. It was a loaded
yeah.
question.
I mean, central banks obviously know that they want to hold something real, and they're printing, making, and distributing something that has no value.
Totally. You have to talk about like investors getting their wealth outside the system. And again, I know you're not talking about Bitcoin, but like, what does that mean in practical terms?
Well, you don't want any intermediaries between you and your capital. And I'll talk. Uh, I mean, gold and silver. First off, they can't bankrupt. So they you can't have you can't have them default. You have them in your hands or in a private non-bank vault. Non-bank because you don't want federal banking regulators to be able to walk in and say, who are your customers? And you want private because, if you have a New York Stock Exchange listed corporation holding your metal, they can get strong on it. As far as stocks go, you want to get your certificates. Now, you can't do that with ETFs. You cannot do that in an IRA, but you want your certificates because a stock certificate is proof of ownership. It's like a title to a car or a deed to a house. And when you put money into a brokerage house, guaranteed by the end of the day, if you put stock or you put money in and you buy stock, that stock is lent out immediately, same day. And that's how these firms make their money. How do they fly around in private jets by charging $7.95 on every trade, and including, a million, 10 million, whatever number, it's $7.95 a trade. That is not a business model that works, but they lend your certificates out. Your stocks are not in your name. Your stocks are in their name for your benefit. Same thing with banks. When you put money in a bank, you're no longer a depositor. You are classified as a lender, and you're classified as the most subordinate lender. So you're going to get paid back last. It's the great taking. The great taking. Read it, watch it. It's 100% real. Everything's footnoted, and all those laws are on the books, and the ink is dry. They started in 2014 and gave it, I don't know, 2023, 2024. All the laws all over the Western world, they're on the books.
I think the one thing that people don't understand when you talked about there, like getting paid last, when this happens, the banks are going to shut their door and
Correct.
we will be the last people to get paid.
That's
Bottom,
correct. And
bottom,
also,
bottom line, including the vaults,
and
including
also,
the vaults that we put our money in, or the gold or whatever.
well, yeah, that's what I was going to get at, including your safe deposit box, which is not safe at all. All you have to do is look at what happened in the 1930s. They went in and they took everything out of safe deposit boxes. Look what they did in LA. What was it, 2 or 3 years ago? They went in and they raided a safe deposit box place. Um, that is not that is not the way to store anything safely.
Uh, if in like 30 years ago, 30 years from now, what do you think the moment that the people are going to look back and go, oh, that was the moment where we should have opened our eyes and should have acted differently?
Uh, the moment.
Or is there? Or is it just like a long, slow boiling frog
Yeah,
in water?
I'm gonna say I think we already talked about it. I think the next time the Fed cuts rates and the bond market goes the opposite direction, that's the moment that discerning people will understand it's over. Because it tells you that the issuer of the world's reserve currency has lost control of, yield control.
Hmm.
They've lost control of the yield curve.
Yeah, that will certainly sign a big problem. Big,
Yeah,
big
the
problem.
average
Yeah.
person isn't going to see that, or the average person isn't going to know that 30 years from now. Um, but people who understand finance will understand that that was the moment. Um, I mean, you can look in history books, and in in my case, the very first book I opened in college was economics. Very first class I went to, and on the very first page, the bottom of the first page, and the top of the second page, it said, "We don't know why the Great Depression happened, but we do know it can never happen again." And here I am, 18 years old, thinking that's complete. And that set me off on a journey basically to find out, why did the Great Depression happen? And it happened because it was a credit event.
Well, and then like how many kids back in the days would have read that and just believed that that would have that was the depression can't happen again. But I think it takes a certain person to actually read something and go, huh, I actually want to fact check that, or like make sure that what you're feeding me in this school isn't actually right or wrong. Or, if you want to take that information and figure it out for yourself. And I admire that. Right? Because it's too many,
999,
yeah, too many sheep in this
yeah,
world.
999 out of 1,000 people would have believed that.
Yeah,
But
yeah,
it just didn't make any sense. You can't make that statement. And I mean, it's not plausible.
yeah,
If you
yeah.
don't know why it happened, how do you know it can never happen again?
Well,
That's
even
just,
even if you
that's,
knew why it happened, it doesn't mean it can't happen again. Let's be honest. Like the universe
that's
unravels in
true.
certain ways,
That's
right?
true too.
That's
Right.
right. That's kind of what I believe. Um, Someone who's 35 years old, okay, someone who's probably in the last 10 years has not seen any gains in silver and gold and all these things, and they were the barbaric relic and blah blah blah, and they made money in all these tech trades and done. What do you tell them now? Like they'd had, let's say 15 years of investing in something that worked for them. How do we, I guess we don't need to convince them. It's not our job to convince them. But what do you tell them? Like, after 15 years of successful investing in tech and Bitcoin and whatever you want to say, that like now is the time to go to hard assets.
I would ask them two questions. The first question would be, uh, what have been the two best assets to own since the year 2000? And the answer is gold and silver.
Yep.
And then the second question I would ask is the US government broke? And 95% of people will say yes, but it doesn't matter. And that's correct. It doesn't matter until it matters.
Until it matters. Thank you for saying that. I say this all the time. Like, oh, housing prices only go up. They'll keep going up
No, they don't.
until they stop going up. Right?
That was the case. That was the case in the United States until from the 1930s, because real estate collapsed in the 30s. But from the 19, whatever the bottom was, 1933, 34, whatever, until call it 1980, when interest rates spiked, real estate got soft and pricing did drop. And then you had the oil bust and real estate collapsed in Texas in 1985, 86. Then you had real estate collapse in on both coasts after the 87 crash in 1988, 89, 90. You had real estate get decimated. You saw real estate again get decimated in 2008, 2009. And that was one of the reasons I left the country in late 2006, because I saw that event coming. And I mean, you were looking at in many cases, 30, 40% haircuts. If you're trying to sell in 2010, 2011, the market was seizing up and prices had collapsed.
Mhm. Yeah, maybe a little bit different, like experience living in Canada. We haven't had, or where I'm from in Vancouver, we haven't had those types of collapses over the years. It's just been going up and up and up. So you talk to anybody like where I'm from, they're like, oh, housing
You
prices
will.
they just keep going up and up and up, right? Because that's what their
Yeah, well,
experience has been.
Vancouver real estate is ridiculous. All you have to do is run numbers to see if they make sense. They make no sense whatsoever.
No, make no
Whether
sense.
it be whether it be commercial real estate because you can't generate enough income to pay the debt service, or whether it be housing. How many people can buy the median uh, house in Vancouver? That
Nobody.
market is almost non-existent,
No. Hey,
and especially with rates going higher.
yeah, it's insanity. If you look at what you're paying for a house up here, and then you're thinking that you're getting taxed at 50% in the first place to be able to afford a house in this tax bracket, then what you're paying in interest over the 25-year period, it's like that house, that $4 million house is actually like 10. Like
Right.
the numbers are insane. And like who wants to do that just for like, there's better places to live in the world if you ask me. For that. That's a little bit off topic, but still on the same kind of theme. So what do you think is going to surprise the most people over the next 12 months? And we'll wrap it up from there.
Yeah, I think the biggest surprise is that the rig is finally going to be broken. And when I say the rig, I'm talking about the rig on everything. We're finding out more and more and more information on so many different topics that we were 100% lied to. I mean, you name the topic.
It's been
And
lied. 100%.
yeah,
100%.
yeah, you name the topic, and it's proof positive that we've been lied to. And I think, and obviously we've been lied to as far as markets are concerned. Markets are rigged everywhere. All markets are rigged. And I think the bubble's going to pop and people are going to understand that, hey, yeah, markets were rigged, weren't they?
Yeah, yeah. Well, I think that the time comes where people are just like, I'm not buying treasuries. Like why? Like why? And like it just makes no sense to me, right? It will happen. And
That's already happening
it's already
with
happening.
central banks.
Yeah.
With central banks, they've cut back their buying and you've got sellers out there now.
Yeah.
And there was an anomaly, uh, I guess it's probably 2 weeks ago now, where you would see intraday just for a tick and then it would normalize. The treasury yield would spike 20, 30, 40 basis points for a trade and then come back down. And unless if that was bad data, that's a possibility. But if that was not bad data, that tells you there's a big seller. It's
Hmm.
taking a haircut to get out, and the public doesn't see it because they don't watch charts, that are on every single trade with on a second, as opposed to a minutely basis, a real time spike and then back down to where it was prior.
Hmm. Hmm. How do you stay optimistic in all this? Like Bill, like when you see so much doom and gloom on a daily basis, and it's just so right in front of your eyes, and like you once you see it, you can't unsee it, you know? And like how do you stay
Yeah.
positive through all that, right? Like it's just it's tough when you see these lies and this manipulation and this bull. Like it's hard.
Well, there is a sense of vindication. I mean, there's just so many topics where you look back and you look like an idiot, but you got vindicated. That's not optimism. I guess the only optimism would be just looking back and saying, okay, I've had a good track record as far as being able to sniff out. And it's obvious, in the future, we're going to be piled on with more and more.
Hmm.
So the optimism is, I've done well in the past. Hopefully I'll be able to sniff out, what
Yeah.
it is in the future, where they're trying to steer us.
Yeah, I keep saying it's just like the system has taught us to, from day one, believe in the church, believe in the banks, believe in modern medicine, and believe in the government. And like, what's the track record of those four things in my life?
There you go.
Horrible, absolutely
Yeah,
horrible. Not one of them has told me the truth
right.
in the end. Right on. Bill, thanks so much for your time, man. That's awesome. I love catching up with you every 6 months or so just to see where we're at. And I'm very much in line with your believing here. There's something going on that is so deep and profound, and 90% of the
Oh, it's
world
way
have
deeper.
like, yeah.
It's way, way, way deeper than
I can even like,
99 point
yeah.
something percent even suspect. I think it's so deep, we're going to be shocked.
Yeah, and I have no problem throwing around numbers like $20,000 gold and $500 silver,
Oh,
$1,000
that's
silver.
that's a stupid number.
Like it's certainly happened.
20,000 is stupid.
Yeah. You
I
think
mean, just based on the debt alone, you're looking at over 130, $140,000 per ounce.
there you
Debt
go.
versus the gold we supposedly hold.
Yeah.
And we
Yeah.
probably don't have the gold, and we're going to have a lot more debt into the future. So you don't even know what number at all. But if that 8,300 tons that they've told us for years that we have and hasn't been audited since 1956, if we don't have the gold, if there's no gold, then dollars in gold terms, it's infinity.
Yeah, what's up with that audit? I thought I read something about it the other day, but like it was made all
Yeah,
bunch of
good luck
noise a
with
year and
that.
a half ago and then it disappeared all of a sudden. So does
Right.
that mean
And
they
now
actually
it's
look?
come back up.
Yeah, so did they look at it and realize it's not there again? Like, come on. Like let's get to the bottom of this.
Well, why would they not let senators in? Why could a senator not go in and look at the gold?
Because it's
Why did they not do an audit? The official reason we've not had audits is because it's too expensive. They spend money like drunken sailors, but for an audit, because it was going to cost 20 million, they didn't want to do that. And I can't see how an audit would cost 20 million, but
I think my kindergarten child could do an audit of how much gold's in there and multiply it by the price of gold.
well, all you have to do is go uh pick 1,000 bars and have them all assayed, and then just do an eye count.
Totally. Weigh it. Figure it
Well,
out.
no, but well, you're counting bars. You're counting crates is what you're doing with
Yeah.
X amount of bars. All you got to do is open the top, and so you take 20 crates and you take everything out of it to make sure it's not locks on the bottom. But you have say 1,000 different bars, and if they
Hmm.
all come back as pure, or a lot of it will be 90% because it was melt from the confiscation in 1933. But it would be easy to do an audit. I mean, the only reason we didn't have an audit was because they had something to hide.
Yeah, yeah. So what's your call? It's not there, or is it there? What's your call?
Uh, the full amount is not there. And even if it is there, let's say that the full amount is there. Are those bars encumbered? Did they get leased out? And the answer to that is, yeah, the government's been leasing gold out. Just ask
100%.
Germany. Just ask Germany. They asked for gold back in 2013. They were told it would take 3 years to get done because of the logistics. Well, I looked into it, and a Boeing 747 cargo plane can hold 95 tons. So in 4 plane loads, they could have gotten all of Germany's gold back to them. Germany ultimately did get gold back, but it was not their gold. The gold that they shipped originally had serial numbers, and the gold that they received back were not the same serial
Take numbers.
numbers.
Yeah, yeah,
So
yeah.
that gold, something happened to it.
There's
Was
something
it
fishy
leaked?
going on here.
Was it sold? I don't know. But that's clearly something nefarious happened.
Yeah, yeah, without a question. Without a question. Right on, Bill. Thanks for your time, buddy. Appreciate that. And we'll catch up to you again in several months from now and certainly keep an eye on things.